4, 3, 2, 1.
Good morning and welcome to the Morning Marketing Minutes brought to you by 3T Academy. I'm your host, Billy, and I'll be taking you through today's top market stories and analysis. Today's show is proudly hosted by Double Bottom Trades, where we'll bring you the latest in trading strategies and techniques. Got to get the tongue working on Monday, man. Before we get into this crazy market and see what it's doing this morning, we're going to get some motivation from Miss April. What do you have for Lady A?
Okay, this morning's motivation for March 27 is, so we must not get tired of doing good, for we will reap in the proper time if we do not give up.
Say that one more again.
Okay, so we must not get tired of doing good, for we will reap in proper time if we do not give up.
Yeah, I take that. You just got to keep going and making sure that everything you do has good intentions behind it, and that you do and move in love and not in anger and emotions and shit. I have a hard time with that sometimes. Yeah, good one. I need. All right. Y'all got any thoughts on that one before we keep it pushing?
Just basically that when you feel like you're ready to give up, it's okay to stop and take a pause, but don't give up on yourself. Don't, just take the time if you need it, but build that community so you can fall back and say, I just don't have it today. I just don't have it.
Agree. And if you're looking for God, you won't find them in religion. You find them in relationships.
Yeah.
Let's keep this pushing, man. I mean, you can see the fear and greed index is at a 33 in the fear box. We're going to see what this market's going to do. We're going for a wild ride for the next couple months until they figure out what they're doing. They turned the printing machine back on, so we're going to see what that's going to do with hyperinflation. It's going to affect the rates across the board and just everything in general. So if you're going to trade the market, make sure you take profits when you have them. We're not doing any swing trades right now. And right now I've pivoted over to strictly the SPY. That's how I'm trading every day, the SPY. And generally putting puts in, but we'll see if we can put some calls in today as well. So 33 is not a bad number, man. It's not what we want to see. We'd like to see the 50s, 60s, and 70s. That way there's volume in the market and we can trade basically whatever we want to trade where there's news involved. So we'll see how that goes today. Let's go over to FinViz real quick and see what the market's doing. So you can see the Dow's up 132 points, NASDAQ's up 36, and the S&P 500's up 22. So you see we broke that resistance line across all three. The Dow was at 32.1, NASDAQ's at about 11,775, and the S&P 100's right at the 395 mark. Now that we've broken this through, we might have still a little more room to run up, but I believe we're going to have a pullback to test that line again and see if that resistance that we broke through, if it's going to hold up as support, if it's going to become resistance and go back down. But if I see a high of the day, then I'm going to put a put on that thing. And if it breaks that resistance line, I'll put another put on it. And if it bounces off of it, we'll put some calls on there. But we'll go over that later while we're building our stuff out. Let's see. Let's go. Monday, March 27th, 2023. A clearer picture. Stocks ended last week in positive territory, even after the volatile triggered by lingering concerns about the banking system and mixed messages from top officials. Now there's a little more clarity. Both President Joe Biden and Treasury Secretary Janet Yellen said the government stands ready to protect more bank deposits if there's more turmoil. Those are the last two people walking the face of the earth that I would listen to about my money or the banking system. Whatever they're saying, I'm going to directly lean to the opposite, man. And while the Federal Reserve did indeed raise its benchmark rate last week, it signaled it could ease off the banking crisis itself, is poised to slow the economy. Overnight, meanwhile, the FDIC said First Citizens Bank agreed to a $72 billion of failed Silicon Valley Bank's asset at a steep discount for about $16.5 billion. It's just crazy what's going on, man. More banks are going to go down. More banks are going to get bought out, and it's going to get centralized. Just it's all leading toward that way. Slowing down. People have been moving their deposits from smaller banks to bigger institutions at a slower rate in recent days. CNBC's Hugh Sun reports the rapid failure of Silicon Valley Bank earlier this month triggered a broader panic that compelled depositors to pull their money out of seemingly high-risk regional banks with less diversified assets to banks such as JP Morgan Chase and Bank of America. You don't think all that was on purpose? which have a broader business models and are better equipped to handle upheaval in the financial market. Still, it doesn't mean the broader banking sector is out of the woods just yet. Another crisis could get deposits moving again in a flash. Something we did or have done is we moved over from a bank to a credit union, because credit unions are member-based and they're nonprofits. Banks are for-profit. So if there's any, overages and stuff like that, they spread them across the members. So I really like my credit union. I like it a lot. Bumpy ride ahead for Detroit. Let's see. The United Auto Workers voted for a dramatic change in leadership. The union, which represents hundreds of thousands of laborers in North American auto industry, narrowly elected reform candidate Shawn Fain as its president. Fain has vowed to take a harder line in negotiations later this year with Detroit automakers, which are all in the costly process of making the transition to electric vehicles to varying degrees. Fain wants stronger benefits for members, as well as better job security and return of cost of living adjustments to compensation. The leadership change also comes after years-long federal corruption investigation that saw more than a dozen UAW officials, including 2 past presidents, convicted of crimes such as bribery and embezzlement. Man, I don't know about y'all, but I've never seen a person in power in high levels like that wasn't in some kind of bribery, embezzlement of some sort. Food stamp cliff. So all this comes together into the economy, guys. Hence why we're going over all of it. This is probably the last one. Food stamp cliff, because we'll have to read more into crisis in Israel. Millions of Americans in most states are losing big chunk of their food budget this month as pandemic-era emergency funding for Supplemental Nutrition Assistance Program, SNAP, benefits run out. For many families, they will be left without at least $95 a month to pay for food. The change comes at a particular precarious time for low-income Americans, as commodity inflation and corporate price increases make it even more expensive to put the food on the table. The Fed, meanwhile, has been raising interest rates to fight inflation and to cool the economy. In turn, retailers are going to feel the pinch too, since shoppers have largely shifted their spending towards necessities like groceries and away from discretionary items like electronics. We've been talking about this, about how the feds are going to move and how, what happens when they make the moves that they make. So we were talking about, if they turn on the printing presses again, hyperinflation is going to come. It's the result of it, especially when you're raising interest rates. People are not being laid off from work, and the prices continue to rise. When you turn on that printing machine again, it's gonna elevate some things pretty dramatically and pretty quickly. But don't be scared, just be prepared, man. It's all part of the plan. All right, now that we got the morning squawk out of the way, let's see, crisis. No, we won't get into that. That's really got nothing to do with the market. So, all right, I don't see my boy D in here, so we'll just go over the market calendar real quick and see what's going up this week. I know last week we had the FOMC. Oops. So today, March 27th, we're looking at Fed Gov Jefferson speaks. And then the 28th, we have advanced U.S. trade balance and goods. It'd be interesting to see where our trade balance is. And then at 10 a.m. tomorrow is going to be a good one, the U.S. consumer confidence. And then we'll just keep watching the rest of the week. But as this is going in on the pending U.S. home sales, I'd like to talk to Darren for a minute about what's going on in the mortgage industry. That's kind of his background. That's what he's done for 30 years. So what's going on in the mortgage industry, bro? I know things are kind of crazy.
Well, yeah, there's a lot of different factors affecting things right now. I don't know if you guys heard of the federal funds rate, but that is the federal funds rate is the interest rate at which depository institutions lend other depository institutions money overnight. That's something that does affect my market and everything, but basically what's going on with that is they're starting to drop the federal funds rate, which is affecting the market. It's going from 5.1 and it dropped to 4.75. And by the end of 2024, it's dropping to 3.75. So basically what's going on, the FOMC met and they did raise rates by a quarter, as you guys know, but they made a comment that was interesting. and they're starting to pull back on certain things that aren't common to the public is what we're seeing. But the comment was that they're not going to have additional, they're not going to have ongoing increases, but they're going to have some additional firming is what they said in relation to rates. So maybe that means that they're just going to keep them steady through the end of the year. Maybe one more increase I've heard in May, but then at the end of 2023, the projections are that things are going to start coming back down. They've actually raised rates, man, too fast, too soon is what they did. And I fully believe we're in an all-out recession right now, and it could go into a, not to be like, you know, I'm just saying, it could go into a damn depression if they don't watch it. You know what I mean? Go ahead, Billy.
And I was just going to agree with that. When I was doing my financial planning with my wife, and this was last year. We were going into planning our financial things for 2023, and that was one of the things that I was scared of. We're not scared of, just preparing for is
Sure.
those depression level type things. And the reason is because it gets exacerbated by media. Think about it. Back in the depression times, they didn't have media like they have now. And now, you know,
Right.
everything happens, it happens on that global market. So
Yeah, I agree, man. Check this out. We've seen some mergers with some banks too. I don't know if you guys heard of this, but you have Silvergate, Silicon Valley Bank, and Signature Bank that had to be bailed out. Those three, $30 billion. And then we're starting to see banks that are going to merge. Like last week, this happened. It's called Credit Suisse. I can't pronounce that name. It's SUISSE. Was forced to merge with UBS, Deutsche Bank. They had a credit default, and there's actually projected that there's 190 small banks in the US that need the same type of bailout, $30 billion. The only other report that we can see that's indicating that after this year that they're gonna maybe start to taper rates back is the bond market and the 2-year treasury note. I don't know if you guys follow the 2-year treasury note much, but they actually put out, the FOMC put out predictions that said that the 2-year treasury note by the end of 2023 is at 5.1. That's its prediction.
yeah,
And then by 2024, it's going to 4.3. And by 2025, 3.1. And then they're going to cap it at 2.5% for long term. But those are just some indicators that state that possibly they know they raised rates too fast, too soon, man. So, and they're starting to see the fallout. So
yeah, they should have done the raising of the rates a lot sooner than what they did, because instead of bringing us in for a soft landing, it's going to be a little bumpy landing. Not that we're not going to land, but
right.
It's going to be a little bumpy.
Yeah, they should have raised them gradually and over time. But
we
anyway,
did
brother.
We did 7 interest rates last year, didn't we?
Yeah.
I mean, we done this 3 now already.
Yep. Like last August, man, they cranked the rate from 3% to 6.5 in about 3 to 4 weeks. It was insanity.
Yeah, that's crazy. That's crazy.
Yeah.
But
But
anyway,
anyway,
good stuff. Thanks for the info, fam. Our mortgage expert,
man.
Mortgage King. If you're ever looking to buy a house or want to know how to buy a house or just have questions about buying a house in the mortgage industry, go check out my boy Darren Lumberjack, also AKA Pig of the Week maker. If y'all haven't seen Pig of the Week, it's the funniest shit I've ever seen in my life. Entertainment purposes only.
Right.
Entertainment only. All right, let's bring over the SPY, man, and kind of see what's going on today. Move this little thing out the way. All right, so we got the SPY on the minute chart. You can see this thing's had a run, man, a nice little run. We all know what goes up must come down, though. So put this right about there on a nice little channel. All right, I like that channel. So off the rip, just on the minute chart, man, I'm be looking for either the breakout or the bump and run of 398.88. So if we hit towards the top up here, we've already hit once, twice. We do have a downward trend bouncing off the VWAP. So I would look for some calls if we break the 398.88, 380 or 398.90, 95, possibly put some calls up into the 399.31. And then of course, if it breaks the 399.31, we would wait for the high of the day and put some calls in. If we break the VWAP or we break the 397.98 along with this trend, it's going to need to break all three for me to put a put in because this thing's it's got some strength behind it. We'll look at the RSI and see where we're at. If it does break all three of these, I'll put some puts in right about 397.80, 397.79. Same thing. I probably wouldn't play anything at the 397.11, but if it gets a nice crack, I will have some calls put in down at the 395.88 and see if we can get a bounce, of course. If it was to crack that, then that's a whole different ball game. But right now, this is going to be the window that we're going to play on the minute chart. Let's go check out the daily real quick and see what we have on the daily. Switch this around, bring the other one up. All right, so you can see we came up to, man, I need to take some of these lines out of here. It's hurting my eyes. I look at it every day. So you can see the RSI is at a 49, so it's got room to run to either side. So we're just gonna have to see what's gonna happen. We do have a nice wick to the bottom side on the last day we were trading. Nice push to the upside. It cracked the 200-day moving average. Let me get some rid of some of these lines, man. Let's get rid of all of them. Okay. Bam. And he said, let there be light. And he showed us candlesticks. So we have this nice wick to the bottom side, a nice heavy hammer. We'll see if we can get some momentum to the top side. I'd like to see more of a hammer and more of a handle on this, pushing to the upside. I wish the body was above the 13, but the body is cracked the 200, but we did close above the 13 and the 200. So it's going to be game on to see if we can run to that 400 again like we did last week, or if we're just going to bounce off of it. Just remind yourselves, we are on a trend down. If you're going to play the SPY with us today, this little trend down, that is a pretty hefty trend. So I do suspect it's going to bounce off trend. We might get a wick past it, but I do think we'll come back down. We'll just have to wait and see what it does. I do not think we will get past the 50. I think like we did last week, we might wick up to it a little bit, but I think between the 50 and this trend down, we're going to have a heavy resistance. I do see nice flat support line right about 390.71 on the daily. Let's go and mark this. Actually, I'm going to put it to the bottom side here and catch that first wick all the way to the left in the bottom of this one. That's going to be my support area. So we'll see if we get a breakout. If we break out of the 50 or out of the trend line there, we could look to put some calls in between the trend and the 50-day, but we'll see how it turns out, man. And that's a wrap for today, fam. That's a wrap for today's morning marketing minutes. I hope you guys enjoyed this quick and informative looking into the financial markets. Remember to stay up to date with the latest news and analysis by visiting our website at 3T Academy and following us on our social media. Big thank you to our host, Double Bottom Trades, for bringing you the best in trading strategies and techniques. And until next time.